You do not want to miss this episode. We're going to talk about the future of wealth, combining stability and innovation. Hi, everyone. You've heard us talk about cash value life insurance. You heard us talk about Bitcoin. Today, we're going to put them together and say, what happens if we put these two concepts together? Welcome to Control and Compound. I am Darren Mitchell. I'm excited for this episode today. And joining me as always is Connor Eagleson. Connor, how are you?
Hey, Darren, I'm doing well. I'm excited to be back on the podcast. I made one appearance in person, and now I'm excited to be back in the studio remote and to talk about this topic.
All right. So, for those of you that don't know who Connor is a wealth coach at Control and Compound, an all around great guy based in Ontario. And Connor's got some background in Bitcoin, so we thought he'd be perfect to come in and talk to us today or help us walk through this today. But Connor, I'm pretty excited about this episode. We've been talking about doing this one for a while. We've got a lot of clients, obviously in cash value life insurance, but we get a lot of clients and a lot of groups we're part of talking about Bitcoin. So this future of wealth, combining stability and innovation, Connor, why don't you tell our listeners what it's all about?
Yeah, for sure. So anyone that's followed the podcast for a while, like I think I have since the first episode, you're going to know that we talk a lot about using, traditional strategies, big one being the high cash value life insurance policies, whole life as a really solid foundation. We talk about, clients wanting that rock solid base to their plan. And then layering in now, as you've done, right? And we've kind of tried to stay on top of what emerging trends look like. Opportunities like Bitcoin, right? AI is another big one. Some of these tech companies, those are exciting as well for us and others that have done the research. Bitcoin's quite an exciting emerging asset class as well. So future wealth building strategies, and then finding a balance of, stability and then also growth opportunities. So I think it'll be really cool about how we can merge these two together and, give some of our insights or our thoughts.
Yeah, and again, before we dig too much into the Bitcoin space here, we are not Bitcoin experts. We don't know anything about Bitcoin. We're not promoting Bitcoin. We are Bitcoin enthusiasts. We are cash value life insurance experts. We can talk about that stuff all day long. We're happy to help you, but we are not Bitcoin sellers. We're not Bitcoin advice givers. We just enjoy talking about it. So take that disclaimer. But if you have been following us, we have done a series of Bitcoin episodes to help you try to understand what Bitcoin is, and we'll put that link in the show notes if you want to see that. But Connor, before you joined Control and Compound, I hinted at the beginning you actually had a background working for a company in the Bitcoin space. So tell us a little bit about that, what you did in the Bitcoin world.
Yeah, definitely. I'm happy to go into that. So before I joined CNC, I was actually working with, I took, my passion for learning about Bitcoin, found a job in the space, and was working for a lending company, a Canadian company that did loans collateralized by Bitcoin. So basically think of it kind of like a bank for Bitcoin. He was born out of, the founder was actually from South America. So if you think about, South American countries, they don't have access to traditional finance like we do here in North America. They can't just roll into TD with a decent credit score and, go and get a line of credit. They would use Bitcoin as an asset to go and lend against. When you realize, how pristine this collateral is and how liquid it is worldwide, there's a huge value there. And so traditional banks, not necessarily accepting of it just yet. They found kind of the solution there and brought this product to market where you could get a loan and unlock the value of your Bitcoin. So that's for the everyday person. The other person that, was a huge target client of ours is the Bitcoiner that's had, 5-10 years of buying and holding Bitcoin, and they're sitting on a large gain, a large appreciation since this asset emerged. Maybe they bought it at, 5, 10, 20, $1,000, and now it's worth 50, 70, $100,000. So they've got significant wealth there that they want to tap into. And as we know, Darren, when you go and, sell an asset, you've got one of the biggest wealth destroyers, taxes. So they want to avoid capital gains. They want to be able to spend their money, but they don't want to lose the future growth. Oftentimes Bitcoiners, they believe long-term that it's going to continue to appreciate. So they don't want to lose that future growth potential. So yeah, basically the company that I worked for solved that problem. We allowed people to collateralize their Bitcoin. They could get access to a loan and be able to use those funds for, their lifestyle, for further investing, whatever it is that they needed the cash for.
Cool. So, when people take those loans, that would kind of be similar to borrowing against your cash value life insurance. The loans are guaranteed, they're uncallable. You can pay them back when, how, and if you want. There's no volatility, that kind of stuff, similar to what we do.
It's very funny. So there's a couple features there, like, the repayment was flexible, but the guarantee and the callability, that's where I really, learned the value of that. When we now talk to clients every day and we talk about, a margin call scenario and how this is an uncallable loan on high cash value life insurance, I feel like people overlook that unless they've ever been in a margin call scenario, which a big part of my role supporting our clients, especially some of those, larger clients that had large loans. Anyone that follows Bitcoin knows that very easily, if the wrong announcement comes out or something happens politically, the market can drop quickly, and so can the loan to value ratio on one of those Bitcoin loans. So yeah, there was certainly margin calls. One of the things I'll never forget was being on the phone with someone at I think it was like 10 or 11 p.m. our time because he was in Australia and his multiple $1 million loan was in the process of being liquidated because the market is dropping so rapidly and there was a panic scenario. And no one wants to be in that situation, but I learned a ton from seeing that volatility because it's good on the upside and the growth, but on the downside, that's where you realize the value of those certainties and those guarantees that we have with the whole life loans.
Yeah, I mean, again, that just sort of sets us up perfectly where we're going to talk about when you have volatility, you need stability even more. So we'll talk about putting these together. So, Connor, when we look out there, there's just so much noise I find in the media out there. It's like housing is going up, housing is crashing, the stock market is crashing, uh, tariffs, elections. But we get everything going on there. But Bitcoin is mainstream media now. Like a couple years ago, we didn't hear a lot about Bitcoin in the regular news world. Today, it's mainstream media. Why do you think the conversation about what we're talking about matters even more today than ever?
Yeah, it's a great question, Darren. I think that with all that uncertainty, people are looking to not just grow the wealth, but they want to make sure that they protect what they have, right? And have control. So with all this noise, it means that, certainty and using tools like Whole Life that offers guarantees, that offers that rock solid foundation, with those more opportunistic plays, like you don't want to miss out on some of these opportunities because all this noise and uncertainty, there is going to be opportunity as well. So, things like AI, things like, these exciting tech companies, things like Bitcoin, real estate's historically been, very solid growth focused asset. So you want to be able to operate in both, but you have to do it strategically because the growth oriented opportunities, they also come with the volatility, right? And people that aren't ready to stomach that and aren't prepared, that's where the emotion can kick in, can become a major wealth destroyer. If you sell something at the wrong time or you get into something at the wrong time and you don't know what you own or you panic and emotions take over, you want to make sure that, you're prepared for both. And this is obviously an emotional time for people. So we want to, kind of have an understanding of what our plan is.
I love it. Okay, so let's talk. Sort of, we'll highlight some of the key benefits of cash value life insurance, and then we'll get into Bitcoin, and we'll kind of combine them together. So again, I can spend every episode talking about cash value life insurance. I absolutely love it. I believe it is the perfect place to store or save the wealth you have now. I love the no volatility, and the volatility I think is twofold. We've got kind of two pieces to our journey in life here. We've got the accumulation, we call it climbing the mountain, where you're saving, and you got the distribution or spending down the second part of the mountain, and no volatility or next to no volatility on the way up is just so important for those opportunities and emergencies when they come along. And coming down that retirement mountain, we don't spend enough time or as much time talking about that. But we recently did a volatility buffer on our previous episode. Check it out if you haven't seen it, and how impactful volatility can be in retirement too. So I love that. Well, of course, love the tax-free nature of it. I love that it's an and asset. I put my money in here, and I can leverage a guaranteed loan and go do something else. And what I find, it makes every other investment you have better. I told someone, I go, it's like having Sidney Crosby, Wayne Gretzky, or Connor McDavid on your line. It's like everyone else on the line gets better. And I think the volatility buffer, when we did that example in a couple podcasts ago, kind of illustrated that it can make your stock market stuff better. It can make your real estate investing better. It can make your personal residence better. It can make the business you have now better. It not only is a great standalone product, but combined with everything else. So again, I'll stop there because I could keep going, Connor. But those are a few of the reasons why I think I just absolutely whole life is a foundation or a place to soar and save your wealth. What about you? What other features do you love about this cash value life insurance?
Yes. So when we think about, our financial planning, we always talk about when we have calls with clients, Darren, remember that hierarchy of wealth. If anyone's had a call with us, we talk about investing in yourself, your business and real estate. But before you go and do any of that, Bitcoin, I would add to that, kind of hierarchy as well. But before you go and do any of that, you want to have a solid foundation, right? So that foundation, we don't want to see 10 or 20% swings in there. Some people, unfortunately, their full foundation is in the stock market. For others, it's tied into, their business, right? Which is great. Those are awesome buckets. But when we see an opportunity that comes up or an emergency and you've got volatility like right now, that's where having a rock solid foundation, I think, is so, so important. And people overlook it. That first step of saving and storing your wealth somewhere and then multiplying that dollar and putting it into those other areas, your real estate, your business, yourself, right? The stock market, or as we're talking about today, Bitcoin. And I'll be honest that even though I've been in Bitcoin for a couple of years now, Darren, it still is always a little bit tough to stomach when you wake up in the morning and you see that the price has dropped by 10 or 20% because, there was the wrong political announcement or China banned it again, or, it's getting less and less that that's happening. But some of these swings that you see over time, even though I really believe in it long term, I'm pretty convicted on that side of things. That volatility is tough to stomach. So I think that, the acronym that I like here, especially with whole life, it's called the SWAN account, the sleep well at night, where I, can get a nice night's sleep, knowing that I've got the rock solid foundation with my whole life, with my cash value, knowing that, the real estate is going to do its thing long term. It has fluctuations, but, it's also trending over time going up. And then when Bitcoin, the more volatile bucket that I have, has those swings, I've got the peace of mind of the solid foundation, the guaranteed cash value growth, the tax-free growth, the death benefit protecting me, but also the ability that, unlike, your RSP or your GIC, that might be at that foundation, it's not locked in. You can borrow against it and redeploy it into those things where, Bitcoin drops by 40%. I want to buy a little bit more. I can go and use the cash value policy to do that.
Great recap there, Connor. Thank you. So let's pivot to the modern side of things, Bitcoin. And again, we're just we're having fun in this episode. We're not telling you should go buy Bitcoin. We're just enjoying the conversation. So a lot of people still don't fully understand it, and I don't. I think the vast majority of people don't understand it. Even the people like me who've spent a lot of time on it. I don't pretend to be an expert on it. We all have more to learn, but probably the most common feedback we hear is it's too risky, right? It's too risky. Like that's the number one knock I hear on Bitcoin. What's your take on Bitcoin and the risk?
Yeah, it's a good question, Darren. And I agree with you that I think that there is a lot of misinformation out there. So first thing I would say, first and foremost, is for everyone, I'd invite them to go and at least listen to a couple podcasts, like put 10 hours in. I think the in the Bitcoin space, people say if you put 100 hours in, you're pretty well, orange pilled at that point. You're not going to go backwards. I know not everyone has 100 hours to go and research this, but you have a bit of a duty for yourself and your family to not just dismiss it by hearing, one bad thing that you read on, social media headline. So listen to some of the big names in the space, Jeff Booth, Robert Breedlove, Preston Pish, Michael Saylor. There's all kinds of information out there. So do a bit of research. And that would be the first thing I would say to take some of the risk away is educate yourself. Back to the control and compound hierarchy of wealth. Number one thing we can do is invest in ourselves. So take some time, a ton of information out there, read the Bitcoin standard, do some research. That's going to take some of the risk away. Beyond that, the other thing that, in terms of the risk, people think that the volatility is risky, that it's, too volatile. It's a bad thing. Volatility can also be a good thing, right? Because, one of the analogies I hear over time is, did you think in the past when people first started, bartering and trading that, gold didn't have fluctuations where one day someone took 2 cows for it, and then the next day they only give you 1 cow for it, and then the next day, because there was less gold available, now you can trade your gold for 3 cows. Like there's volatility when any new asset is emerging. So it's also a good thing because it means there's opportunity for growth, right? You don't just go from non-existent in 2009 to now being a $2 trillion market cap like Bitcoin has, without some ups and downs. But in terms of that risk, now that we see the US, adopting it with a strategic reserve, you get these big financial institutions, BlackRock, Fidelity, all these ETFs, We're not telling people, like you say, to go put everything into it, but do some research if you have, an appetite for innovation, the future of what could be coming and what's likely developing and what's building the foundation of, kind of the transition with the financial system. It can also be very good to have volatility and take calculated risks with confidence once you've done some research.
All right. I like it. Okay. So we talked about cool benefits of cash value life insurance. We talked about, some potential benefits, certainly long term with Bitcoin. So let's connect the dots. Let's bring it all together. How can someone use whole life and Bitcoin, these strategies together? How do we put piece them together?
Yeah, good question. So that's where, like, for me, it's back to kind of that rock solid foundation. I like to flow as much as I can into, whole life policy, build that up as my cash, my dry powder. And then, when an opportunity presents, whether it's a real estate opportunity, whether it's stock market, whether it's, Bitcoin, like we're talking about today, you could actually utilize the policy to borrow against that growing cash value, right? That's going to happen no matter what. It's going to increase every single day inside the policy. You've got the guaranteed growth, you've got the death benefit protecting you, all of that, tax free inside the insurance policy. But then I also have an opportunity fund where, without interrupting any of that compounding, I could go dip into and borrow against the asset. So, good deal comes up. I think that you, or maybe the normal co-host, has a good line where, when does the deal of a lifetime happen? When one person needs money, another person has access to money. That's essentially what's happening when Bitcoin's crashing. Is you're getting, people that are selling, they're taking profits, the institutions need to rebalance whatever's happening in the background. Then you see these corrections. You get the general public where, they get scared because they don't realize what they own. They're selling at a loss. That's because that's presenting an opportunity for people that have access to money. So when I have this solid foundation, and how I can pair it together is, last week, or a couple weeks ago, Bitcoin's at 100,000. A couple days later, it's at 80,000. If you believe in it still, and you're looking at the long-term trajectory, now all of a sudden it's on sale, right? It's an opportunity. It's not a risk anymore. The volatility, it's a feature. If you look at it that way, where long term you believe it can continue to go up, you can tip into the cash value to go access a loan and take advantage.
Wow. All right, so we talked about some of the risk, but obviously, Connor, there's a lot more risks involved than just what we touched on. What are the other risk or considerations people should be aware of when they're investigating and trying to learn more about Bitcoin?
Yeah, definitely. So I think the big one, like I've kind of alluded to, is if someone doesn't really know what they own and they see one of these 10 or 20 or 30% drops, which can happen very easily, they might have an emotional, reaction to that. They might sell, buy high, sell low. That's not the plan. It's buy low, sell high is kind of the wealth creation plan, if you're following, the traditional Warren Buffett type of strategy. So that's what we want to be aware of is, know what you own. Have a plan that in Bitcoin, if you look at, a 4+ year trajectory, I don't think there's ever been a period where you've been down in value if you've held for more than 4 years. I can definitely tell you from experience, but there's periods where you're down in value in the short and medium term. But long term, the trajectory has always been more than 4 years. So I would say that that's, what we're looking at here is long term savings. This isn't money that you might need next month or next week to, pay your phone bill or whatever is happening. This is long term. So that's the big one. And then if we're going to talk about combining the two, obviously, you want to make sure that you're going to manage any kind of leverage that you're using, even though it's conservative leverage inside of the whole life policy, to, go and use that and take care of how you're going to repay that loan, have an exit strategy. So, using some cash flow to pay down the interest, or using a sale of Bitcoin in the future, if that's your goal, to sell the asset, just like if you're getting into real estate or getting into a business opportunity as well. So with the right person that has a plan, there's control, there's options, and then there's, kind of that peace of mind when things are uncertain, that you can go and take advantage and manage those risks.
Yeah, I just see so many unique characteristics of each, and then when they're put together, like I believe cash value life insurance is the perfect place to store and save your wealth. How long? I think for the short term, for the midterm, and for the long term. I think Bitcoin is a really nice place to store your wealth for the long term, and obviously has the potential to much more upside than a lot of other long term things. So it's like, well, great. I like the control. If we go back to retirement mountain, for tell you retire, you're climbing the mountain, you're saving, you're storing. Well, why is control so important there? Because there's going to be an amazing opportunity when it comes along, and you want to be able to leverage your cash value life insurance, take advantage of it. There's going to be probably a lot of financial emergencies. You want to be prepared for that. But then coming down retirement mountain, if volatility is one of the wealth destroyers, especially in retirement, and Bitcoin is even more volatile today anyway than the stock market, we have something that pairs perfectly with it. Next to no volatility cash value life insurance, and to act as a volatility buffer to say, okay, if Bitcoin's down X amount, 20% in retirement, I'm not going to sell my Bitcoin to take it out, or maybe I won't even borrow against my Bitcoin that year if that's your strategy, to make sure you don't get that leverage call or decrease the chances of a leverage call. So I love that that can work together. And we didn't even get into the Bitcoiners that never want to sell their stuff, right? Never want to sell their stuff. Same as the real estate people. I want to keep the properties in the family. Bitcoiners never sell your Bitcoin. Well, what's gonna happen when people die? Well, there's something in Canada we're not gonna be able to avoid, and that's income tax. So there's gonna be all kinds of taxes potentially, again, we won't get into the we'll assume there's gonna be tax on your Bitcoin at some point down the road, whether you're in an ETF or you own the Bitcoin. We're assuming there's gonna be tax on your business and assume there's gonna be tax in your real estate portfolio. And we talk about this cash value life insurance, but we failed to bring up enough this big old death benefit. And what that big old death benefit, what I tell people all the time is I go, I've dealt with a lot of people at death and a lot of family businesses and income properties at death. And there's always a lot of problems. And you know what solves a lot of problems? A big bag of cash. A big bag of tax-free cash can, you know what? Maybe one sibling's not upset now that they didn't get the properties because they get a big bag of cash. Maybe the family doesn't have to sell the Bitcoin that's down 30% when the mom and dad died to pay all the tax. Maybe they don't have to sell the income properties. So that death benefit, again, solves some of that volatility concerns you have, because we know we're going to be able to replenish some of these buckets with this tax-free death benefit. We know we're going to have access to money in the good times and the bad, whether you're in the savings phase or the spending phase. So, I love how they come together, Connor. So I'll let you kind of wrap it up with some parting comments. But what else do you think is important for Canadians thinking of this strategy? What they should know?
Yeah, I think that was a great summary that you gave there, Darren. So I'll try and fill in any kind of gaps. Not that there were any, but no, I think we're in kind of a new era, right? You see everything going on with technology. We've got all kinds of AI tools. I don't think we're going backwards on any of that in terms of technology. Same with finance as well. A lot of developments, things are moving digitally. They're online now. Nice thing is these insurance companies, they're staying rock solid as well through all of this. But then looking at these other options, right? If you've got, your traditional advisor is still dismissing this stuff, they're not implementing, these digital assets, they're not learning about it, like the Nelson Nash line, the arrival syndrome, right? There's no such thing as arriving in knowledge. I think you just want to be careful about, where you're getting your advice from. Do your own kind of research, think critically about some of this, because if you're still dismissing this, or you've got, advisors that are dismissing this for you, and you're not doing any, further questioning of that, I would just really invite people to take another look at it. Again, we're not telling people to buy this stuff or to jump right into Bitcoin, but do some research. Obviously, if you're not using ChatGPT, start using that. If you're not learning about Bitcoin, even though the US government and these companies, ETFs are now buying it, I think that you're going to find yourself falling farther behind. So I would just that would be my words of wisdom: is do some research. Hopefully, we sparked a few ideas here. Obviously, if you want someone to help talk about this, you and I will talk about this all day. You can certainly reach out to us, and we'll talk about the whole life side. We'll talk about some of our ideas on the Bitcoin side as well. But that's kind of my parting thoughts. Darren, what about you?
All right. I just say cash value life insurance and Bitcoin very well could be the future of wealth, combining stability with innovation. I like to think of it as peanut butter and jam. They're both great on their own, but you slap them together and they're even better. So I'm really grateful, Connor, for you coming on and sharing your wisdom, both on the cash value life insurance and the Bitcoin today. And I just say to all people listening or watching us on YouTube or listening to us, let us know what you think of this. We're happy to do more of these, and we could do similar things and dig into more details about some of these concepts. So give us some feedback. Let us know what you think. And if you want to talk about cash value life insurance, please reach out. You can reach us at controlandcompound.com. That's it. Thanks for watching. Thanks for listening. Thanks, Connor. Thanks for watching this episode of Control and Compound. Don't forget to subscribe and hit that bell button so you never miss a new episode. And if you're ready to learn more, head to our website, controlandcompound.com. The link's below.